AMD has just dropped its fourth quarter and full year 2025 financial results, and if there were any doubts about whether the AI era has truly arrived for the red team, this report just put them to rest. We are talking about record-breaking revenue, a massive scaling of their data center franchise, and a company that looks fundamentally different than it did just 24 months ago. In today's deep dive, we are going to tear through every single page of this earnings release. We'll look at the record $10 billion quarter, the explosion in data center sales, the surprisingly resilient PC business, and the specific guidance management just gave for 2026. Most importantly, we're going to look at the hidden numbers in the margins, specifically how export controls and inventory releases shifted the math, to see if this growth is as sustainable as it looks on the surface. Before we get into the details, if you find this breakdown helpful, make sure to like the video, subscribe to the channel, and turn on notifications. It really helps the channel grow, and it lets me keep bringing you deep, no-fluff earnings breakdowns like this one. This video is not financial advice. It's for educational purposes only. Nothing here should be taken as a recommendation to buy or sell any stock. Do your own research or consult a qualified financial professional before making investment decisions. To understand why this quarter was so pivotal, we have to look at the context heading into the end of 2025. The market has been obsessed with one question: can anyone actually compete with NVIDIA in the AI accelerator space? AMD has been the great hope for cloud providers looking for an alternative. At the same time, the traditional PC market has been undergoing a massive shift toward AI PCs, machines capable of running large language models locally. Investors wanted to see if AMD's MI300 and MI400 series chips were gaining traction and if their Ryzen processors were capturing the premium end of the consumer market. This report provides the definitive answer to those questions. Let's start with the headline numbers because they set the stage for everything else. AMD reported fourth quarter revenue of $10.3 billion. To put that in perspective, that is a record for the company and represents a massive 34% increase compared to the fourth quarter of 2024. It is also an 11% jump just from the third quarter of 2025. When you step back and look at the full year, the trajectory is just as impressive. Total revenue for the full year 2025 hit $34.6 billion, which is also a record and up 34% year over year. In a world where many tech companies are struggling to find double-digit growth, AMD is accelerating. Now, let's talk about the bottom line because revenue is only half the story. From a GAAP perspective, which includes all the noisy accounting items like acquisitions and stock-based compensation, the results were very strong. For the fourth quarter, GAAP gross margin landed at 54%. This is a significant 3 percentage point increase from the same time last year. Operating income hit $1.8 billion, and net income was $1.5 billion. This resulted in a GAAP diluted earnings per share of 92 cents, a massive jump from the 41 cents they reported a year ago. However, as serious investors, we often look at the non-GAAP figures to understand the true running profitability of the business. On a non-GAAP basis, AMD's fourth quarter was spectacular. Gross margin hit 57%. Operating income reached a record $2.9 billion, which is 28% of their revenue. Net income was a record $2.5 billion, and non-GAAP diluted earnings per share came in at a record $1.53. This beat the previous year's fourth quarter EPS of $1.09 by 40%. When we look at the full year 2025 totals, the scale of the success becomes even clearer. For the 12 months ending December 2025, GAAP operating income was $3.7 billion, up 94% from the prior year. Net income was $4.3 billion, and diluted EPS was $2.65. On the non-GAAP side, which strips out things like the amortization of intangible assets from the Xilinx and Pensando acquisitions, AMD delivered $7.8 billion in operating income and $6.8 billion in net income. That gives us a full-year non-GAAP EPS of $4.17. This represents 26% growth in annual earnings per share, while the company was simultaneously making the largest R&D investments in its history. I want to pause here and give my personal opinion on these headline figures. While a record $10 billion quarter is something to celebrate, we have to be intellectually honest about how they got there. If you look closely at the report, there is a very specific disclosure about the U.S. government's export controls. AMD noted that their results included approximately $440 million in net inventory and related charges for the full year because of restrictions on their MI308 data center products designed for China. In the fourth quarter specifically, they actually benefited from a $360 million release of previously reserved inventory. Furthermore, revenue from these MI308 sales to China was about $390 million in the quarter. My take on this is that while the 57% gross margin is a record, if you remove that inventory reversal and those specific China sales, the margin would have been closer to 55%. Now, 55% is still great, but as an investor, you have to ask yourself if that record margin is sustainable, or if it was a one-time gift from the accounting department and a specific sales window. It's a nuance that many headline-reading traders will miss, but it's critical for those of us looking at the long-term valuation of the stock. Let's move into a deep, step-by-step breakdown of the financials by segment, because this is where you see the engine room of the company. The data center segment is now the absolute heart of AMD. For the fourth quarter, data center revenue hit a record $54 billion. That is up 39% year over year. This wasn't just driven by one product, it was a dual-threat performance. On one hand, you have the massive demand for the AMD Instinct GPUs, specifically the MI300 and the newer MI400 roadmap. On the other hand, you have the continued dominance of the EPYC server processors. For the full year, the data center segment brought in $16.6 billion, which is up 32%. What I find most impressive here is the operating margin within the data center segment. In Q4, they reported $1.6 billion in operating income for this segment, which is a 30% operating margin. For the full year, the data center segment generated $4.8 billion in operating income. This tells us that AMD isn't just selling chips at a discount to gain share. They are selling high-value, high-margin products that are becoming the backbone of the world's most advanced AI clusters. Then we have the client segment, which covers the processors for laptops and desktops. This was perhaps the biggest surprise of the report. Client revenue for the quarter was a record $3.1 billion, up 34% year over year. For the full year, it grew a massive 51% to $10.6 billion. Management noted that this was driven by strong demand for Ryzen processors and significant market share gains. My opinion here is that AMD has finally broken the budget stigma in the PC world. People aren't buying Ryzen because it's cheaper. They are buying it because in many cases it's better. The Ryzen AI 300 and 400 series chips are setting the bar for performance per watt, and that is reflected in these record numbers. The gaming segment, which includes Radeon graphics cards and the semi-custom chips for consoles like the PlayStation 5 and Xbox Series X, also had a very strong quarter. Revenue was $843 million, up 50% year over year. This was driven by higher semi-custom revenue and strong demand for the Radeon RX series. For the full year, gaming revenue was $3.9 billion, up 51%. While this is a great result, we have to recognize that the console cycle is maturing. AMD is seeing a peak here, and while they are doing a great job of capturing value, I don't expect gaming to be the primary driver of growth over the next 3 years compared to the data center business. Finally, let's look at the embedded segment. This is largely the business they acquired through Xilinx. This segment had been struggling with customer inventory adjustments for much of 2025, but we are finally seeing the light at the end of the tunnel. Revenue was $950 million in the quarter, up 3% year over year, while full-year revenue for embedded was down 3% at $3.5 billion. The sequential and year-over-year growth in Q4 suggests that the trough is behind them. Operating income for embedded was $392 million in the quarter, which is a massive 41% operating margin. This segment remains a cash cow for AMD, and as the industrial and automotive markets recover, I expect this to be a major contributor to their free cash flow in 2026. Speaking of cash, let's look at the balance sheet and cash flow, which is where the strength of a company is truly measured. In the fourth quarter, AMD generated $2.3 billion in cash from operations. After spending $222 million on property and equipment, they were left with $2.1 billion in free cash flow. For the full year, they generated $6.5 billion in operating cash flow and $5.5 billion in free cash flow. This means that for every dollar of revenue AMD brought in during 2025, they kept 16 cents as pure distributable cash after all expenses and investments. The balance sheet is in excellent shape. AMD ended the year with $10.6 billion in cash, cash equivalents, and short-term investments. Their long-term debt is only $2.2 billion. When you have nearly 5 times more cash than debt, you have what I call strategic optionality. They can afford to keep investing $8 billion a year into R&D. They can make strategic acquisitions like the ZT Systems deal, and they can weather any temporary downturns in the market. Now, I want to talk about something that often gets overlooked in these reports: operating expenses. To grow at this rate, you have to spend money. GAAP operating expenses for the quarter were $3.8 billion. For the full year, they spent $13.5 billion. The vast majority of this, $8.1 billion for the year, went into research and development. My view on this is very clear. In the semiconductor industry, R&D is the only thing that matters in the long run. If you stop spending, you fall behind the Moore's Law curve. AMD is currently spending nearly 25% of its revenue on R&D. This is the toll they have to pay to stay competitive with NVIDIA and Intel, and so far, it's paying off. The report also mentioned a $109 million loss from discontinued operations related to the divestiture of ZT Systems' manufacturing business. This is an important strategic move. By selling off the manufacturing side of ZT Systems and keeping the design and system integration talent, AMD is focusing on being a high-margin chip and systems designer, not a low-margin hardware assembler. It shows that Dr. Lisa Su and her team are laser-focused on margin expansion and capital efficiency. What do these numbers signal about the momentum of the business? In my opinion, it signals that AMD has successfully transitioned from a component company to a platform company. They aren't just selling you a CPU. They are selling you the rack-scale infrastructure, like the Helios platform they teased at CES, the software stack, ROCm, and the networking capabilities to run a modern data center. The fact that they are now partnered with every major cloud provider, AWS, Google Cloud, Microsoft Azure, and Oracle, shows that they have achieved escape velocity. They are no longer the second choice. In many AI workloads, they are now the preferred choice. However, we have to look at the guidance for the first quarter of 2026, because that's what the market will trade on tomorrow. AMD expects revenue for Q1 to be approximately $9.8 billion, plus or minus $300 million. This would be a 32% increase year over year. However, it is a 5% decline sequentially from the record fourth quarter. They also expect non-GAAP gross margin to be approximately 55%. This guidance is a bit of a mixed bag. On one hand, 32% year-over-year growth is fantastic. On the other hand, the 55% margin guide is a step down from the 57% they just reported. As I mentioned earlier, this confirms that the Q4 margin was boosted by those inventory releases. The market might react negatively to the lower margin guide, but if you understand the underlying math, 55% is actually a very healthy number that shows consistent execution. They also noted that this guide includes about $100 million in MI308 sales to China, which is a significant drop from the $390 million they did in Q4. This tells me that the China tailwind is fading and the company is preparing for a world where they can't rely on that market. Let's talk about the specific product highlights mentioned in the report because they give us a roadmap for the next 12 months. AMD has announced several leadership products. The 5th Gen AMD EPYC processors built on the Zen 5 architecture are now available and are delivering massive performance gains. They also highlighted the AMD Instinct MI325X accelerators, which are now in production, but the real excitement is around the MI400 series. They have announced the MI44OX GPU and the MI43OX. These chips are designed to compete head-to-head with NVIDIA's next-gen architecture. In my view, the most important disclosure in the entire report regarding products was the partnership with Cisco and Humane to deliver 1 gigawatt of AI infrastructure by 2030. This is a scale that is hard to wrap your head around. 1 gigawatt of power for AI training and inference is equivalent to the power consumption of a large city. If AMD is the silicon heart of that joint venture, it provides a massive long-term floor for their data center revenue. They aren't just looking at the next quarter, they are looking at the next decade of infrastructure build-out. They also highlighted the new Ryzen 7 9850X3D, which they are calling the world's fastest gaming processor. While gaming is a smaller part of the revenue now, it's a halo product. It keeps the brand relevant with the most demanding users and developers. When the best gamers in the world use AMD, it has a trickle-down effect on the enterprise market. It builds a level of brand equity that is very hard for competitors to replicate. Now let's get into the bull versus bear takeaways based strictly on the data disclosed in this report. On the bull side, first, the data center growth is spectacular and shows no signs of slowing down. To grow that segment 39% when you are already doing billions in revenue is a sign of a massive market tailwind. Second, the client segment is showing that AI PCs are a real thing and customers are willing to pay a premium for them. This is driving a richer product mix and higher margins. Third, the balance sheet is a fortress. With $10 billion in cash and growing free cash flow, AMD has the resources to outinvest almost anyone. Fourth, the recovery in the embedded segment provides a stable, high-margin base that will support overall company profitability as the industrial and automotive markets pick back up. On the bear side, first, the reliance on China is a persistent risk. Even though it's a smaller part of the revenue now, the fact that they had to take $440 million in charges for the year shows how vulnerable they are to U.S. government policy changes. Second, the gross margin peak in Q4 was somewhat artificial due to inventory reversals. Investors who were expecting 57% to be the new normal might be disappointed by the 55% guide for Q1. Third, the sequential revenue decline of 5% for Q1 shows that AMD is still subject to some level of seasonality, and that the hyper-growth phase of AI might be entering a more steady-state ramp. Fourth, the competitive landscape is only getting tougher. NVIDIA isn't standing still, and Intel is fighting for its life. AMD has to execute perfectly just to maintain its current position. What should investors monitor over the next 3 to 6 months? Number 1 is the MI400 series ramp. We need to see if those chips are being qualified and ordered by the Big Four cloud providers. Number 2 is the gross margin trend. If it stays at 55% or ticks up toward 56%, the stock will likely be fine. If it starts to dip toward 53%, it suggests that pricing pressure is hitting the market. Number 3 is the progress of the Cisco joint venture. We need to see some concrete wins or bookings from that partnership to believe in that 1 gigawatt goal. And finally, monitor the inventory line on the balance sheet. AMD's inventory was $4.3 billion at the end of the year. If that starts to balloon, it suggests they are overproducing. If it drops too fast, it suggests they are missing out on sales due to supply constraints. In my personal opinion, this was an A- quarter. The numbers are undeniable and the execution is top tier. Dr. Lisa Su has built a machine that can deliver consistent growth in the most competitive industry on the planet. I think the market has been a bit too focused on whether they are beating NVIDIA, rather than focusing on the fact that AMD is becoming a massive, highly profitable giant in its own right. They don't have to kill NVIDIA to be a great investment. They just have to keep doing what they are doing. The transformation of the balance sheet over the last 5 years is one of the greatest corporate turnaround stories in history. Remember, this was a company that was flirting with bankruptcy not too long ago. Now, they are reporting $10 billion quarters and generating billions in free cash flow. That kind of stability is what attracts institutional investors and long-term buy and hold funds. However, I do want to reiterate my caution about the margins. As a technical analyst as well as a fundamental one, I see that 57% number as a high watermark that might not be reached again for a few quarters. If you are buying the stock here, you have to be comfortable with the 55% margin level. If that is your baseline, then the valuation looks a lot more reasonable. If you are chasing the record margin, you might be setting yourself up for disappointment. Another thing I noticed in the report was the tax benefit. AMD's GAAP net income was significantly impacted by a $1 billion tax benefit in the fourth quarter. This is a non-cash accounting move, but it made the net income headline look much larger than the operating income. Again, this is why we look at the non-GAAP operating income, the $2.9 billion figure, as the true measure of the business's health. As we conclude this deep dive into the 2025 results, It's clear that AMD is in the strongest position it has ever been in. They have the products, the partners, and the capital to be a dominant player in the AI era. While there are risks, regulatory, competitive, and cyclical, the trend lines are all pointing in the right direction. This report wasn't just about the fourth quarter, it was a statement of intent for 2026 and beyond. Taking everything into account, I'm assigning this quarterly report a solid grade of 9 out of 10, and concluding that, based on these results, the stock is a clear buy. AMD delivered record revenue and earnings while successfully navigating a minefield of export controls and inventory adjustments. A 34% growth rate at a $34 billion annual scale is world-class. The data center segment is growing at 40%, and the PC segment is showing legendary resilience with 50% annual growth. While the gross margin was slightly boosted by one-time items, the underlying 55% margin is a massive improvement over historical levels. With $10 billion in cash and a visionary management team, AMD is a core holding for any AI-focused portfolio. The Q1 guidance, while seasonally lower, still represents 32% year-over-year growth, showing that the company's momentum is durable. If you enjoyed the video, like, share your thoughts in the comments, and subscribe to the YouTube channel so you don't miss out on the next important analysis update. Thanks for watching, and I'll see you in the next one.